Hello everyone, John A.G. here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, the real market updates that everyone else cannot tell you. So please subscribe to this channel, and I love you all, my subscribers, for your relentless support. And please, I urge you to watch this video till the very end, because YouTube will not push my videos to more people. The algorithm suppresses this kind of truth, so we have to stand together. To truly understand the absolute magnitude of what just happened, we have to peel back the layers of the greatest financial lie we were told for the last 40 years. We were meticulously conditioned to believe that money was something printed in a central bank basement. We were taught in schools and by suited financial advisors that wealth was simply a series of digital numbers on a glowing screen, backed by nothing but the full faith and credit of governments that are currently drowning in oceans of unpayable debt. While you were dutifully saving in a currency that was being diluted by the trillions, the custodians of the global banking system were actively, intentionally, suppressing the ultimate barometer of their mismanagement: gold and silver. Listen to me carefully, because this is the mechanism of the theft. Through the COMEX, through the London Bullion Market Association, and through the issuance of thousands of unbacked paper contracts for every single physical ounce of silver that actually sat in a vault, they manipulated the price of reality. They convinced the entire globe that silver was hyperabundant. They convinced the retail investor, the father trying to save for his daughter's college, the mother trying to protect her retirement, that silver was merely a volatile, dirty industrial byproduct, completely unworthy of a serious investment portfolio. They sold you paper while they quietly accumulated the physical. But mathematics is entirely undefeated. Reality, eventually, always calls the margin loan. What we are witnessing right now in 2026 is the spectacular, violent collision between an unstoppable force and an immovable object. The unstoppable force is the global, terrifying realization that fiat currencies, the US dollar, the euro, the yen, are in a terminal, irreversible devaluation spiral. The immovable object is physical reality. You cannot print a physical ounce of silver out of thin air. You cannot have the Federal Reserve artificially quantitative ease a silver mine into existence. It takes up to 10 grueling years of exploration, permitting, capital expenditure, and intense labor to pull this miraculous metal out of the Earth's crust. And right now, as we speak, the Earth is running dry, precisely at the moment human demand has reached the stratosphere. Let us step away from the blinking red and green financial charts for a moment and look closely at the physical world around us. The mainstream financial media, the very people who missed this historic breakout, will desperately try to tell you that silver's surge past $60 is merely a speculative frenzy. They will dismiss it as a retail meme trade. They are lying to you. They are lying to cover up a catastrophic generational miscalculation in global physical supply chains. Here is the terrifying truth they don't want to broadcast. We are currently in our 5th consecutive year of a severe structural global supply deficit. Since 2021, the world has consumed nearly 1 billion ounces of silver, more than the global mining industry has pulled out of the ground. That is more than an entire year's worth of global production, completely wiped out, vanished into the industrial machine. Where is it all going? Why are the vaults bleeding dry? It is fueling the very foundation of our future. Look closely at the artificial intelligence revolution that has taken over the global economy. The massive, sprawling data centers required to power the next generation of AI, the colossal server farms that process trillions of deep learning calculations per second, run incredibly hot and require immense electrical efficiency. They require advanced thermal management, high-efficiency electrical components, and flawlessly conductive pathways. There is not a single element on the periodic table that conducts electricity and transfers heat better than silver. It is the undisputed king of conductivity. AI-focused servers consume exponentially more silver than traditional cloud computing centers. As global power demand for these AI facilities doubles in 2026, millions of ounces of silver are being permanently locked into hardware, fused into microchips and motherboards that will rarely, if ever, be economically recycled. The metal is being consumed and destroyed. But AI is just one head of the industrial hydra. Look at the global green energy transition. Global solar photovoltaic capacity is forecasting to reach a staggering, unprecedented 700 gigawatts this year alone. But it is not just the volume of panels, it is the technology inside them. The industry has shifted from older P-type cells to the highly advanced N-type TOPCon and heterojunction solar cells. Why does this matter to your wallet? because these new, hyper-efficient solar panels require between 50 to 80% more silver paste per panel than the older models. Silver paste is the absolute, irreplaceable lifeblood of solar energy collection. The solar sector alone is now devouring nearly a third of the total global mining supply of silver. Add to this the aggressive electric vehicle mandates sweeping across Europe, Asia, and parts of North America. An electric vehicle, with its complex battery management systems, silver-tipped switches, and massive wiring harnesses, requires up to 3 times the amount of physical silver as a traditional internal combustion engine vehicle. And we must also factor in the charging infrastructure, the modernization of the electrical grid, and the millions of miles of new conductive wires required to handle this energy load. This specific type of industrial demand is what macroeconomists call price insensitive. A technology giant building a $10 billion AI data center in the desert does not care if the price of silver is $30, $60, or $150 an ounce. A multinational energy conglomerate rolling out a massive solar farm does not care about the COMEX spot price. The cost of the physical silver inside their products is a tiny fraction of their total capital expenditure, but the metal itself is absolutely mission critical. Without the silver, the billion-dollar data center does not compute. Without the silver, the solar panel does not generate power. Therefore, these industrial titans must buy the metal at any price the market demands. And they are buying it all, aggressively, leaving the traditional COMEX and LBMA vaults gasping for air, triggering the physical squeeze we are seeing today. While the technology and energy sectors aggressively drain the physical inventories from one side of the globe, a massive, unprecedented geopolitical shift is draining the monetary inventories from the other. In early 2026, the world watched with bated breath as geopolitical tensions in the Middle East threatened the absolute stability of the global energy supply. The Strait of Hormuz became a global flashpoint, sending shockwaves through the oil markets. But while the masses were totally distracted by the terrifying headlines of kinetic conflict, a much quieter, far more permanent, and far more dangerous war was being won in the background: the war for global monetary supremacy. The BRICS nations, now an incredibly expanded economic powerhouse including Saudi Arabia, the United Arab Emirates, Iran, and Egypt, have executed an absolute masterclass in macroeconomic strategy. They watched the weaponization of the US dollar and the SWIFT payment system in 2022. They realized with crystal clarity that keeping their sovereign national wealth in Western fiat currency or Western government bonds was a fatal, existential vulnerability. Their coordinated response has changed the world forever. Through the BRICS 2026 financial framework, these nations have systematically engineered a silent, ruthless takeover of the global precious metals market. They have moved from merely controlling a large portion of global gold production to actively hoarding it, targeting overwhelming control of the physical market. Central banks across the East, led by China, Russia, and India, have been vacuuming up physical gold at a historic, unprecedented pace, effectively breaking the back of the Western paper pricing mechanisms. Gold recently smashed through the $5,000 per ounce barrier, permanently establishing a new paradigm and moving completely out of reach for the average retail investor. And this is the crucial pivot point you must understand. When gold becomes the exclusive multi-thousand-dollar playground of sovereign nations, central banks, and the ultra-wealthy elite, where does the terrified retail capital turn? Where do the family offices, the mid-tier hedge funds, and the middle class run when they realize their fiat currency is burning? They turn to the, quote, poor man's gold. They turn to silver. Historically, the gold-to-silver ratio has hovered around 50-1 or 60-1. In recent years, due to extreme paper manipulation, it was stretched to an absurd, mathematically illogical 90-1. But as gold locked in its new $5,000 paradigm, the historical rubber band aggressively snapped. The algorithmic trading bots, the macro funds, and the smart money looked at silver sitting in the 30s and 40s and realized, simultaneously, that it was the single most undervalued, mispriced physical asset on planet Earth. The resulting massive, violent capital rotation is exactly what tore the roof off the $60 resistance level. This is not a temporary spike. This is not a flash in the pan. This is a profound, permanent re-rating of silver's fundamental role in a rapidly de-dollarizing world. This brings me to the most difficult, emotional part of today's message. It is the part that genuinely breaks my heart as a financial educator and as a human being who cares deeply about the financial survival and dignity of everyday families. Over the past 3 years on Aurex, I have stood before this camera, looking through this lens, and begged you to see the storm that was gathering on the horizon. I showed you the data. I showed you the COMEX drain, ounce by ounce. I showed you the relentless BRICS accumulation. We bought silver together when it was incredibly boring. We bought it when the financial media mocked us as conspiracy theorists. We bought it when it was languishing in the low 20s, completely ignored by the masses. We did not buy it to get rich quick. We were not chasing a meme stock or a digital token. We bought physical silver to build a heavy, unbreakable ark before the macroeconomic flood arrived. And now, the floodwaters are rising rapidly. At $60 and beyond, we are witnessing the tragic, devastating phenomenon of the late investor. These are the good, honest, hardworking people who trusted the system. These are the fathers and mothers who kept their life savings in a traditional 60-40 portfolio of stocks and bonds, foolishly believing the Federal Reserve had everything under perfect control. These are the people who watched their grocery bills double, their home insurance premiums skyrocket, and their purchasing power evaporate into thin air, but still sat paralyzed, waiting for a well-dressed talking head on a mainstream financial network to give them permission to protect themselves with precious metals. I spoke with a man just yesterday who embodies this tragedy, a retired diesel mechanic. He spent his entire adult life working with his hands, bleeding for his paycheck, breathing in exhaust, and playing exactly by the rules society laid out for him. He watched silver break $40 earlier this year and told himself he would be smart and wait to buy on the dip. He watched it violently break $50 and rationalized that it was just a speculative bubble that would inevitably burst. Yesterday, he watched it settle firmly above $60, and sheer, unadulterated panic finally set in. He realized, in a moment of terrifying clarity, that the money sitting in his traditional bank account is nothing more than an ice cube melting on the sidewalk in the middle of a July summer. He asked me, his voice trembling, "John, is it too late? Have I missed the massive profits? How do I protect my wife's retirement now?" I had to look him in the eye and give him the brutal, unvarnished truth. The truth is, the era of walking into a local coin shop and buying a massive monster box of silver eagles for pocket change is permanently over. The asymmetric trade of a lifetime, the rare historical opportunity to exchange heavily manipulated, dying paper currency for deeply undervalued, essential physical labor and energy, has officially closed its doors to the masses. Yes, silver will likely go to 100, 150, and perhaps beyond. The sheer, unbroken mathematics of the global debt system demands it. But the percentage gains from 60 to 150 will not completely alter the trajectory of your family's financial lineage the way the incredible journey from 20 to 60 did. The late investors entering the market today are no longer buying to secure massive generational wealth. They are buying out of sheer, terrifying desperation to preserve whatever fragile fragments of purchasing power they have left. They are paying an exorbitant premium for a cramped seat on a lifeboat that has already launched from the sinking ship. This is the ultimate, cruel, psychological warfare of inflation. It ruthlessly punishes the prudent traditional saver and massively rewards the early, contrarian adapter. It forcefully transfers wealth from the uneducated and the compliant to the prepared and the defiant. The late investor is completely paralyzed by a psychological phenomenon known as anchor bias. They vividly remember when silver was $25 just a few years ago, and their brain vehemently refuses to let them buy it at $60, even though the underlying fiat currency they are holding has lost a massive, irreversible portion of its true value. They wait, and they wait, and they hope for a crash, until the physical pain of holding failing fiat currency finally exceeds the psychological pain of paying the new elevated price for hard assets. And by the time that psychological breaking point is reached, the institutional giants and the sovereign nations have already taken the lion's share of the profit. Why am I so absolutely certain that $60 is a new foundational floor and not a temporary ceiling? Why won't silver simply crash back down to $25 like it did after the peaks of 1980 or 2011? Because the entire macroeconomic environment of 2026 is fundamentally, structurally broken in a way it has never been in human history. In 1980, Federal Reserve Chairman Paul Volcker had the supreme luxury of raising interest rates to nearly 20% to violently crush inflation and protect the dollar. In 2011, the global debt burden, while large, was still manageable enough for central banks to execute massive mathematical trickery without imploding the bond market. Today, that luxury is completely gone. The United States Treasury is facing an apocalyptic borrowing requirement of over $2 trillion this year alone, just to keep the lights on. The U.S. national debt has surged past $35 trillion. The sheer interest expense on that debt has now surpassed the entire defense budget of the United States. Global debt has crossed the point of mathematical no return. The Federal Reserve, the supposed masters of the universe, are currently trapped inside a burning building of their own meticulous design, and they have locked all the exits. In early May 2026, we heard Fed officials quietly, almost imperceptibly, admit that inflation has not only completely failed to approach their mythical, mathematically impossible 2% target, but has actually re-accelerated. They cannot raise interest rates significantly higher because doing so would instantly bankrupt the U.S. government, cause the heavily leveraged commercial real estate sector to completely implode into dust, and trigger a deflationary depression that would make the 1930s look like a mild economic hiccup. But simultaneously, they absolutely cannot lower rates or stop their stealth quantitative easing. Because the moment they do, the sticky inflation that is currently eating away at the middle and lower classes will instantly ignite into a hyperinflationary firestorm. They are entirely paralyzed. The only tool they have left in their fading arsenal is yield curve control and the quiet, desperate monetization of sovereign debt. In plain, undeniable English, they must continuously print the money out of thin air to pay the interest on the debt they already owe. This is a doom loop. The global financial market knows this. Sovereign nations across the East know this. Even the heavily managed World Bank, in its April 2026 Commodity Markets Outlook, openly projected massive, sustained increases in commodity and energy prices due to ongoing geopolitical shocks and profound supply shortfalls. When the price of oil and energy rises, the heavy industrial cost to mine, refine, and transport physical silver rises in perfect tandem. The foundational floor price of basic production elevates permanently. There is absolutely no going back to the old normal. The old normal was a temporary historical anomaly, funded entirely by artificially cheap energy from the East and blind, misplaced faith in the US dollar in the West. Both of those massive pillars have now crumbled to dust. So, where do we go from here, knowing the reality of the landscape? If you are an early, loyal subscriber to Aurex, if you listened to the warnings, learned the history, and actually took physical delivery of your wealth when it was highly unpopular to do so, take a deep, grounding breath. Look at what you have achieved for your family. Do not let the massive intraday volatility shake you out of your hard-won position. The financial establishment will desperately try to engineer massive paper smackdowns in the futures market. They will dramatically hike margin requirements on the COMEX exchanges to force weak hands into liquidations. They will deploy every dirty trick in the regulatory playbook to try and break the psychological momentum of this movement. But you must remember this fundamental truth. You do not hold physical silver so you can trade it back for more dying, depreciating paper dollars. That defeats the entire purpose of the ARC. You hold silver to permanently opt out of their corrupt system entirely. You hold it because it is honest, unhackable money in an era of universal institutional deceit. You hold it because when the geopolitical dust finally settles and the new global monetary system is inevitably constructed, likely heavily backed by a strict basket of essential commodities led by the BRICS nations, your physical ounces will represent true, unencumbered equity and purchasing power in that new world. If you are a late investor watching this right now, feeling the bitter sting of regret and the heavy weight of financial anxiety, hear me very clearly. Blind panic is not a financial strategy. Do not let fear dictate your actions. Do not recklessly remortgage your family home or drain your emergency reserves to blindly chase a massive green candle on a digital chart. But you absolutely must radically and immediately shift your financial worldview. You must deeply understand that holding zero physical, tangible assets is no longer a conservative, safe financial strategy. It is the most reckless, dangerous gamble you can possibly make with your family's future. Start small if you have to, but start immediately. Find local, highly reputable bullion dealers. Do not buy paper ETFs that you cannot hold in your hand. Understand that paying a high premium over the spot price is simply the new cost of admission to reality. Realize that $60 or $80 silver is not just a successful trade, it is a glaring, blaring symptom of a terminally sick fiat currency. Your goal right now is no longer to become a millionaire in rapidly depreciating fiat terms. Your vital goal is to absolutely ensure your family can afford the basic, essential necessities of life when the local grocery store and the energy companies radically reprice their goods to match the terrifying reality of the expanded money supply. The violent smashing of the $60 resistance is not just a victory lap for precious metals advocates. It is a solemn, deafening warning bell ringing relentlessly across the globe. It is the undeniable sound of an old, debt-based economic era violently dying, and a new, much harsher, heavily commodity-driven era being born. We are living through the pages of financial history. The macroeconomic history books of the future will look back at 2026 as the definitive year the dam finally broke. The year the massive, intricate paper illusion was permanently pierced by the undeniable, heavy physical reality of a world running out of cheap resources, running out of global trust, and most importantly, running out of time. I want to look into this camera and thank every single one of you who has walked this incredibly difficult, lonely path with me on Aurex over the years. We built this community on the bedrock of truth, on the meticulous analysis of hard data, and on a shared, unyielding desire to protect our families from the massive financial storms we knew, mathematically, were coming. The storm is no longer on the horizon. The storm is violently raging outside our doors right now. But because of your immense diligence, because of your willingness to face uncomfortable truths, your financial roofs are reinforced and your families are protected. Please take the time to share this video with someone you care deeply about. The YouTube algorithm will absolutely not favor this message because it speaks the direct, unfiltered truth about the fragility and corruption of the global banking system. It is entirely up to you to be the lighthouse for your friends, your neighbors, and your family members who are currently completely lost in the dark, watching their savings evaporate without understanding why. Stay incredibly grounded in this volatility. Stay relentlessly vigilant against the media narratives. Keep steadily accumulating real, tangible assets. Keep your physical wealth completely outside the traditional banking system, and never, ever stop educating yourself. I'm John A.G. This is Aurex. I'll see you in the next update.